The Vietnamese stock market corrected sharply after rising 8% in the first 7 trading days of the month of January. Highly leveraged, many of them new local investors sold aggressively after 82 new cases of COVID infections have been discovered in the north of Vietnam. And also it's pre-holiday season, the Chinese New Year, which is called Tet holidays in Vietnam, is just about to begin in Vietnam. The Vietnam index, the VNI, closed the month minus 4.3%. The AFC Vietnam Fund declined by 1.9%. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. This latest correction provides us, valuation-wise, with plenty of upside potential. Here you have a chart of the VN index from November 2019 to end of January 2021. And there's plenty of upside potential, which we believe we're going to have. On one hand, we are from a chart technical angle on the support line now, as you can see, that's the pink line below. But also there is a considerable valuation gap between Vietnam and regional neighbors of Vietnam. So I think there's a lot of upside potential, really. But after rallying around 20% in the fourth quarter of 2020 and another 8% at the beginning of January, the Vietnam index corrected 17% from the top, which was on January 18th, to the bottom, and is now already bouncing back quite nicely, actually, in the month of February. Let me go to the next slide. This is a slide of nominal and real interest rates. The positive mood in Vietnam, Vietnam has a very optimistic population. And this is now combined with the hunt for yield and investment opportunities. And this is obviously not only the case in Vietnam, that's around the globe. But if you look, for example, at real estate prices, that have already risen sharply over the past few years in a decreasing nominal interest rate environment, at the same time resulting in a meaningful decline of real interest rates. Real interest rates are inflation-adjusted interest rates, as you can see here on this slide. So what might not look logical at first sight, during a time where many businesses are struggling due to COVID-19, around the globe actually, not only in Vietnam, there is a lack of investment alternatives in an already extremely low negative or real interest rate environment. And these are obviously strong drivers behind the strengths of the stock markets around the globe. Also, of course, in Vietnam, we saw a considerable strength the last few months. And the central banks and low interest rates environments are obviously helping to drive these markets. And with the example on this slide, the Nikkei 225, the Japanese stock market index, reached a new all-time high in US dollar terms since 30 years. So this is actually, it took them a long while, but finally they reached a new all-time high in US dollar, as I said. Another strong argument for a strong emerging market has always been a weakening US dollar. And this is a trend which we're seeing right now. On this slide, you see the green line, which is the US dollar index, and the brown or dark line is the MSCI Emerging Market Index, which is going up at the same time, obviously, the US dollar is declining. So I'd like to talk a little bit about ESG. In our report, we give a concrete example of a seafood company, how that company does in these 8 ESG factors 2 for environmental, 3 for social, and 2 for governance, as you can see in the slide. How we evaluate how it compares to other people in the industry and what they are doing to improve, to become a better company in Vietnam. And actually it's quite an interesting, good example. But here on this video clip, I don't want to go into details, it would take too long. But let me say just a few things in general about ESG in Vietnam. Vietnam, ESG becomes more and more popular, but of course Vietnam still has a lot to do. It's a frontier market, and they don't have the technologies and the funds of Western markets like in Europe or in the US maybe, but still they are doing considerable efforts, and they are forced to. So why do I say forced to? Vietnam signed a lot of free trade agreements with the UK or with Europe, just to name 2 of them. But both of them actually have this so-called ESG, so these environmental, social and governance provisions in these agreements, meaning that they need to fulfill certain requirements of the UK and of Europe in general around property protection, labor rights, sustainable developments. So if Vietnam is, and they do export quite a lot of products to Europe, often the requirements are that they have a CE mark on their products. So the CE mark is a typical European requirement. It's about the European directives, such as, for example, European harmonized performance and safety standards. So these products have to fulfill these requirements, and then they will have the CE mark on it. And Vietnam obviously needs to fulfill these requirements when they produce it. Also, a lot of companies are importing wood furnitures from Vietnam. And a lot of buyers in Europe are asking for an FSC certification, which means that these products need to become from a responsible managed forest and provide environmental and social economic benefits. So let me talk a little bit about what we think about 2021 and what we can expect. We are actually quite positive. We think 2021 will be quite a successful year for Vietnam. You have seen probably the GDP growth in 2020 for Vietnam was 2.9%, which was one of the few countries which had a positive GDP growth. And this has obviously something to do how they handled the COVID cases, and that could open up their economy much earlier than other countries had. And yeah, if I look at COVID infections so far, as of the 28th of January, according to IMF, there were 1,651 cases reported, and this is out of 100 million population in Vietnam. And unfortunately, around 35 deaths in Vietnam. So in terms of COVID, how they managed it, they did pretty good job so far. And obviously the latest outbreak, they are doing everything to control that very quickly. But given that it's a relatively low number of new infections, I'm quite confident they will actually bring that under control in a relatively short period of time. If we look at expectations of various research houses around the globe when they look at Vietnam, Fitch Solutions just recently upgraded their GDP growth forecast to 8.6%. And this is obviously quite optimistic for Vietnam. But if you look, for example, at S&P, they think that Vietnam will grow even at 10.9%. And then you have other organizations such as Goldman Sachs, HSBC, World Bank, DBS. But then you have probably one of the lower or more pessimistic forecasts is ADB, Asian Development Bank, with 6.1% GDP growth. So still, I said more pessimistic, it's still a considerable GDP growth for 2021, what they expect. So Obviously, macroeconomic numbers are pretty positive, but also when we look now at the beginning of the year in terms of new investments which are coming into Vietnam, Foxconn, as you know, Foxconn is producing a lot of products for Apple, just announced that they're going to increase their investments by $700 million US dollar, adding 10,000 jobs to Vietnam. So they already have had investment of 1.5 billion in Vietnam, and now with this new 10,000 jobs which they create, the overall employees of Foxconn will come to 35,000. So quite a big employer in Vietnam. But also Intel. Intel just announced another 500 million or 475 million US dollar investments. And actually they add that investments to an already built state-of-the-art chip assembly test manufacturing facility in Saigon High-Tech Park. And they built that in 2006, and they already invested 1 billion so far in there, plus now another almost 500 million which comes to that. So it takes it almost to 1.5 billion, their investment. So these are quite nice, good examples. Also, maybe interesting to note is that the Vietnamese government just recently announced that they really try to focus on quality and not quantity anymore when it comes to foreign direct investments which are coming into Vietnam. So they have a strong preference for projects with modern technology, high added value, modern governance models, and strong ties to domestic economic sectors. Then maybe let me just touch quickly on the Biden administration and the tensions of the previous administration, so the Trump administration, between China and the US. Everybody is asking me, well, what do you think with Biden? Well, will these tensions, will they go away? Well, the short answer is, I don't think they will go away overnight. It will take time. Of course, the discussions will be much more constructive, but it will not change overnight. Nevertheless, yes, the Biden administration is probably more reasonable in terms of how they deal with China. But they will be not soft. That's my first impression of the Biden administration. So this is all from me. Thank you very much for listening. I wish you all a great February, of course, and you're going to hear from me at the beginning of March with my February update. Thank you and goodbye.